There is some truly wacky going on at the COMEX in the silver stockpiles this week that is basically unprecedented. Big movements, we don't know why, but I think we're about to find out in about 5 business days. Meanwhile, the Treasury has raised about $300 billion, $350 billion. The question is, where is it coming from? We're going to go into the exact numbers and the probable source for where these dollars are coming from to fund the government. They're raising interest rates again in Europe very aggressively. It's going to lead to the biggest banking crisis ever, in my opinion, not very far off from that, and to internalize that none of this.
The positive news is that the physical market on the COMEX is being drained. There's little doubt about that. We're down to somewhere around 27 million ounces in the registered category. It's, as far as I'm concerned, the bond market is a joke at this point because everyone knows mathematically it can't be paid back. So how do you extend the game? Well, you extend the game like all nation states or all currency creators. You make your currency appear to be more valuable or give an incentive to hold on to it.
Tonight, we uncover critical developments in the silver market and the broader economy with insights from 2 prominent voices, Rafi Farber and David Morgan. If you're monitoring precious metals or concerned about the global financial system's future, this bulletin is essential viewing. Rafi Farber reveals unusual, unprecedented shifts in silver stockpiles on the COMEX, hinting at manipulation just ahead of major contract deliveries. He ties this to aggressive monetary policy and a looming banking crisis, arguing that gold and silver will be indispensable as fiat systems weaken. David Morgan highlights the alarming depletion of physical silver reserves and its implications for market stability, cautioning against systemic risks if delivery demands outpace supply. His analysis underscores the enduring value of precious metals in inflationary times.
Is normal, and nothing is business as usual. If you look at the red line, which is the 200-week moving average of Fortuna silver mines, you will see that this is a 6-year chart going back to January 2017, so 6.5-year chart. The 200-week moving average has basically not moved at all. It is now at about $4.41. That's basically where it was at in January 2017, and it went as high as, let's say, $4.79, $4.80. So the 200 moving average has moved from 480 to 440 to maybe 38, something like that. Point being that yes, day to day, week to week, maybe even month to month, the stock is volatile, as are all gold and silver stocks. But over the long term, over a 200-week average, it is basically stable. And now you could say, yeah, so aren't we losing out on all the inflation for now? Yeah, we are. But that is not going to last for long. These stocks, these companies are, by definition, money printing central banks, except they don't print it, they mine it. And the world is going to need real money when the inflationary fiat system of the entire world collapses. Money will be in the strongest demand of any other commodity, including food and water. You do not need food and water. Food and water exists. You need a monetary medium to distribute food and water. Otherwise, the food and water that you have will be useless. Where is the new money coming from? It's not new because the Fed is not printing right now. Money is being drained from somewhere to fund the government. So here we have, where are Treasury dollars coming from? The Treasury is raising a mad amount of money. $328 billion, $327 billion, $925 million exists in the Treasury's bank account at the New York Fed. At the low point on June 2nd, it was $23,368 million. That is a difference of $304,557 million. Where is it coming from? So we go to the next slide to find out. Here we have reverse repos, which have been trending slightly down since June 2nd, but not significantly so. Total reverse repos, if we look at the current number, are $2,037,102 million in reverse repos. On June 2nd, when the Treasury statement was at its low of $23 billion, reverse repos outside the banking system, all the leftover money printed from the 2020 lockdown printing insanity, those have gone down from $2.142 trillion on June 2nd to now $2.037 trillion on June 21st. And now, what the hell is going on with silver given this week's smash? We have here a chart of SLV holdings, how much silver supposedly is held by SLV. I'm just assuming it's there. I know that's a controversy, but I got to take the orthodox positions here. I apologize for that. So either short covering or bottom picking in SLV by a big bank. Why do I say that's happening? Here you have the big smash from earlier this week when silver was down. I think it was 4.15%. On that day, this little blue line over here, that is the silver holdings of SLV going up by, I think it was 5.5 million ounces, right? So we have here going up by 5.5 million ounces when the SLV ETF itself went down by 4.15%. That means that somebody is putting a bunch of silver into SLV as the ETF falls in value. Now, who can do that? The only parties, the only actors that can do something like that are the authorized participants of SLV, and those are big banks, partners with JP Morgan in this SLV scheme, whatever it is. Look at the numbers. This is Malka Amit. This is, what is it? I don't know who owns Malka Amit or who stores their silver in that depository, but this is really strange, wacky stuff. You see here, this is the eligible supply of silver in Malka Amit. It's about 3.02 something million ounces if you look at the chart. But if you look at the numbers for the latest June 20th, you'll see here how many ounces are actually left in the eligible stockpile. This is not for sale against futures. 4,766 ounces. That is less, or it's about equal to one single silver contract, which is nominally 5,000 ounces, but it can be up or down by 10%. Basically, what I'm saying here is Malka Amit took its entire silver storage and moved it for sale. Obviously, it's not Malka Amit itself. That's just a vault. Somebody who stores all of its silver, all of their silver, all 3.01 million ounces of it in Malka Amit, just decided to put it all for sale, all on the same day, at the same time, and just dump it on the market. When will we find out what this movement is for? We have delivery of a major silver contract, July silver 2023, in 5 business days, and there are 53,604 contracts that remain open with 5 business days to clear. This happens over and over again. There's rollover. It gets frustrating, but I still have never seen an entire vault be emptied of storage in a single day. That is very strange, and it requires attention. We are, meaning human society, human civilization, we are on a burning ship. There are signs of insanity everywhere, in every sector, in every profession. It seems like humanity is losing its mind. The education system, the health system, the political system. We're on the verge of what looks to be nuclear war. I pray to God that it will not happen. But the question is, what is it that is driving all of this insanity? And the warp core cleared out. Everything is being censored. Medical, political, educational, or social. But there is one thing that the system doesn't seem to censor or have any interest in censoring, and that is the talk on money and what money is and gold and silver stacking.
Rafi Farber's analysis. 1. Unusual COMEX activity. Entire vaults have been emptied in a single day, signaling strategic moves or manipulation before July's major silver contract deliveries. This marks one of the strangest events in COMEX history. 2. Treasury maneuvers. Over $300 billion has been funneled into the U.S. Treasury in just weeks. Farber questions the source, emphasizing that such actions are unsustainable in a tightening monetary environment. 3. Fiat systems under pressure ***. Central banks may print fiat currency, but their true power lies in mining tangible value, gold and silver. These commodities will be critical as the world transitions away from inflation-ridden paper currencies. 4. SLV Holdings spike. Significant additions to SLV Holdings, 5.5 million ounces, despite its falling value, suggest large-scale manipulations by major financial institutions. David Morgan's perspective. 1. Draining physical reserves. COMEX's registered silver reserves have plummeted to 27 million ounces, a near-crisis level. Morgan highlights that this depletion leaves little room for significant delivery demands. 2. Bond market concerns. He calls the bond market a joke, citing the mathematical impossibility of paying back U.S. debt. Rising interest rates may temporarily strengthen the dollar, but cannot sustain its value in the long term. 3. Silver's historic role. Silver remains a store of value during crises. From Venezuela to Turkey, countries facing severe inflation prove the necessity of holding precious metals. 4. Freedom and real money. Beyond economic systems, Morgan emphasizes that silver and gold are critical for maintaining personal and financial freedom during uncertain times. Why this matters? As Farber and Morgan point out, the global economy is entering uncharted waters. Central banks, aggressive monetary policies, and market manipulation are driving systemic instability. For investors, this is a wake-up call. Silver and gold aren't just commodities. They are safeguards in an increasingly unpredictable financial landscape.
So you do that by raising the interest rate. If you look at some of the banana republics that have failed, since they don't have a real debt market like the U.S. does, they just inflate away and it becomes worthless very quickly. In the U.S., since we are the debt capital of the world, all that debt has to be paid back in dollars. So if the dollar costs more, meaning the yield is high, then there's more perceived value to it. More people are willing to participate and continue the game. So if we went back to interest rate policy, which I highly doubt, but I won't rule it out completely, I think that's where you'd see the dollar break. What I mean by dollar break, it's that at that point, you'd have to be almost undereducated about money at any level to understand that now we're telling you zero interest rates, money's not worth anything. It has no value. It's zero interest rate. And therefore, it's trying to bail out of the dollar and get into something else. That's not a scenario I actually see happening. I think you're going to see more of this Fed Now program that's operated in July, just a couple of weeks away. It's bank to bank. It won't be individual to bank, but it could be a precursor. Some say yes, some say no. I read it. I couldn't make a strong case that it's a precursor to the direct payment method through the Fed, but it will definitely speed up transactions bank to bank. So we're in uncharted waters, as you and I have talked about for years and years. The metals are still a safe haven, but in my darker moments, I think, how well have they done? And it depends by what metric you use. When I started the Silver Investor, silver was under $5. Inflation adjusted low on a historical basis. It was the lowest price for silver in all of recorded history. So certainly I did my best to get people in low. Not many people came on board. The positive news is that the physical market on the COMEX is being drained. There's little doubt about that. We're down to somewhere around 27 million ounces in the registered category. And I've seen it get down in the low 30s a few times in the 20-something years I've been watching the commitment of traders and the warehouse receipts. And Ted Butler did an article on SilverSeek talking about, I think he asked the question, has manipulation ended? I don't want to misquote anybody. But he made a strong case for how much the open interest has dropped off. And all his points are valid because they're based in fact. But I had a slightly different take. I think that the open interest has dropped, there's the fact we have to agree on. But it's due to the fact that there really isn't that much registered silver available to make good on people that will stand for delivery. And what that means is you don't want to have too much risk, which means instead of trading 10 cars or so many, that's slang for contracts, but trading in the hundreds of contracts or 500s of contracts, you pare it down. Either you leave the market or you reduce your risk, because if someone does stand for delivery, the COMEX cannot default because by their rules, they can settle in cash. But if they did that, especially to a big player, if it wasn't some onesie twosie like me standing for a contract or two or whatever, the CFTC blows you off and gives you a letter, says, here's your check. You don't have the rules say we can pay you off. But if that were to happen to somebody like a Samsung or a Tesla or Apple or even it's a main manufacturer that manufactures solar panels, for example, any of those, I think, would mitigate into the silver markets community really quickly. And I think that the silver bugs would absolutely take advantage of it and take action, knowing that the COMEX is having issues with their inventory supply. The number one advocacy is freedom. I made that video about 10 years ago, and it started with brother John F., and he showed Bernanke or Ron Paul showing a silver coin to Bernanke. But the second half of that video, I talk about, it doesn't matter how much money you've got, real money, gold, silver, if you lose your freedom, if you lose your ability to go where you want to go, say what you want to say, buy what you want to buy, travel where you want to travel. If you lose that, if you've lost your freedom, it doesn't matter how much honest money. And I'm just adding on to that, Elijah. I think there will be absolute resistance on the pushback, whether it will go into where there's gold and silver-based cryptos and they run as a parallel to the new system. That's a possibility. In fact, I'm very hopeful, but I'm not overly optimistic that the powers that be wouldn't try to muddy the waters in that realm. We don't know. I do think that face-to-face transactions cannot be stopped. So there'll always be what's called a black market, which is really a free market metals. And just taking a digression from there, Elijah, there's a movie years ago called Looper, L-O-P-E-R. And in that science fiction movie, the assassins are paid off in gold and silver. And but the point is that all free market activities in that era, this is in the future, are done primarily with silver. So in other words, you've got your script from the authorities, but if you want to go to a certain club or go to a certain location or visit somebody or whatever, you have to pass through the gate, and the gate requires payment in silver. So interesting, I digress to make the point that you can outlaw it, you can smash it down, you can penalize it, you can do all kinds of things, but it will walk on majestically because people will do what's in their own self-interest, especially during trying times. And if you've got the advantage of buying 2 loaves of bread for half an ounce of silver, and then people don't get mad at the price, just give you the idea, whatever, 1/10 of an ounce of silver, or the fiat of the realm, most people will start using real money, and you have an advantage there. It's true. That can be proven already in Argentina, Venezuela, Turkey, any places that had severe inflation. If you have precious metals, 99% of the time.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Tonight, we're diving deep into the silver market and broader economic developments with insights from 2 respected voices, Rafi Farber and David Morgan. If you're following the twists and turns of precious metals or concerned about the future of our financial system, stay tuned. This is a story you don't want to miss. Let's start with Rafi Farber's eye-opening analysis of recent events in the silver market. Farber describes what he calls truly wacky activity at the COMEX, specifically in silver stockpiles. In a highly unusual move, entire vaults of silver have been emptied in a single day. This kind of action, he says, is virtually unprecedented and raises serious questions about what's driving these movements. With major silver contract deliveries just days away, Farber believes we're about to uncover the reasons behind this strange activity. Is it manipulation? Is it preparation for something bigger? The answers may start to emerge within 5 business days. Shifting gears to the U.S. Treasury, Farber highlights another startling development. In recent weeks, the Treasury has injected over $300 billion into its accounts, an extraordinary sum by any measure. Where is this money coming from? Farber explains that the Federal Reserve isn't printing new money right now, so these funds are being drained from somewhere. He connects this to reverse repos, which have declined slightly but still hold over $2 trillion in value. These shifts suggest that liquidity is being pulled from the system to fund government operations. But at what cost to financial stability? Farber also delves into the broader implications of rising interest rates. He argues that the Federal Reserve's aggressive rate hikes are not business as usual. Instead, they're pushing us toward what he predicts will be the largest banking crisis in history. With inflation continuing to erode purchasing power and the fiat currency system under immense strain, Farber believes we're nearing a tipping point. He emphasizes that when the inflationary fiat system collapses, the world will turn to real money, gold and silver, to distribute essential resources like food and water. Without a stable monetary medium, even basic necessities become inaccessible, he warns. Now, let's turn to the silver ETF market, where Farber points out another strange phenomenon. Despite a significant drop in the value of the SLV ETF earlier this week, its holdings increased by 5.5 million ounces of silver. This discrepancy suggests that large financial players, possibly major banks, are manipulating the market. Farber describes this as a coordinated effort to prop up SLV's inventory while its price drops, raising more questions about the integrity of the silver market. As we shift to David Morgan's perspective, the story becomes even more compelling. Morgan, known as the Silver Guru, focuses on the physical silver market, where reserves are being drained at an alarming rate. On the COMEX, registered silver reserves have fallen to just 27 million ounces. Morgan points out that this level is dangerously low, especially given the potential for large-scale delivery demands. He warns that if a major player like Tesla or Samsung were to stand for delivery, the COMEX might struggle to fulfill those obligations. Although the COMEX has rules allowing for cash settlements, such a move would severely undermine confidence in the system. Morgan also takes aim at the bond market, calling it a joke due to the impossibility of paying back U.S. debt. He explains that rising interest rates are a temporary measure to make the dollar appear more valuable, but they're not a long-term solution. Instead, they highlight the fragility of the current economic system. Morgan stresses that silver's historical role as a safe haven asset is more important than ever. In nations like Venezuela, Turkey, and Argentina, where inflation has ravaged currencies, those holding precious metals have fared significantly better. But Morgan doesn't stop there. He touches on the broader implications of economic freedom, arguing that no amount of money, gold, or silver matters if personal freedoms are lost. He references a growing resistance to centralized financial systems and suggests that face-to-face transactions in precious metals could offer a way to preserve individual autonomy. Drawing a comparison to the movie Looper, where silver is used as a form of underground currency, Morgan envisions a future where people bypass failing fiat systems in favor of real money. Both Farber and Morgan agree on one crucial point. Silver and gold are not just commodities, they are lifelines in an increasingly unstable financial world. Whether it's the draining of physical silver reserves, bizarre moves in the ETF market, or the broader collapse of trust in fiat currencies, these developments demand your attention. So, what does this mean for you, the investor? The message is clear. We're entering uncharted waters, and precious metals are more than just a hedge. They're a necessity. As Rafi Farber says, we're on a burning ship, and the signs of systemic instability are everywhere. David Morgan echoes this sentiment, emphasizing that silver and gold offer the ultimate protection against economic chaos. Here at the Economy Express channel, we encourage you to stay informed, stay vigilant, and take steps to safeguard your assets. Thank you for tuning in, and we'll see you next time with more insights to navigate these turbulent financial times.